ICT said you could quit your job in 90 days trading the silver bullet strategy. But do you actually know how the silver bullet really works? In this video, I'm going to break it down step by step, from what the silver bullet actually is to the exact time window it's traded in, and how to identify the high probability setup using liquidity and market structure. Now, before starting off, here's a quick checklist we need to follow. And trust me, time plays the most important role here. Now, why am I saying this? Because according to ICT, there isn't just one silver bullet. There are several depending on the time window they come to fruition. Don't believe me? Watch this.
This right here is model 2022. Buy side taken, shift in market structure, fair value gap, go short. That's model 2022. This right here, trading up into that is the 7 o'clock in the morning to 9 o'clock in the morning, New York Open kill zone, silver bullet. Man, how many silver bullets? I got a whole rack of silver bullets.
For our silver bullet, we'll be focusing on the AM session, specifically from 10 a.m. to 11 EST. That's the window where this setup is designed to work best. Next, we're going to start marking our key reference points. First, mark out the 9 a.m. candle. Then identify the Asian range, that's from 8 p.m. to 12 a.m. Eastern Standard Time, and the London range, which runs from 3 a.m. to 5 a.m. Eastern Standard Time. What we're looking for next is a sweep of liquidity from any of these ranges, the highs or the lows. So ask yourself, since midnight, has the Asian range, London range, or the 9 a.m. candle been swept on the hourly time frame? If the answer is no, then we don't have a trade set up yet. But if price does sweep one of these levels, let's say it takes out the high, then we'll drop down to the 1-minute chart and look for a shift in market structure with displacement, followed by a bearish fair value gap forming inside the 10 a.m. to 11 a.m. time window. That's our short setup, and it's the same logic the other way around. If price sweeps the lows around, we'll look for a bullish market structure shift and a bullish fair value gap to take a long entry. And if price doesn't shift its structure or fail to form a fair value gap on the 1-minute chart within that 10 a.m. to 11 a.m. window, then it's a no trade day. Simple as that. I have added a detailed breakdown PDF in the description. Make sure to download it and go through it after watching this video. Now you guys need to lock these rules into your trader brains. If you break these rules, the market's going to humble you fast. Your stops will get taken out and you'll wonder what went wrong. But it's always the same answer. You didn't follow the rules.